All righty, traders. Welcome to the.
Hola a todas y todos.
Oh, hang on. I think I am on the wrong channel because I'm hearing a different language coming through. I think we should be good right now. All right, traders. Good afternoon, good morning, good evening, and welcome to the ByDzyne session today. This is the session that we do every week. Every month. Normally the first Monday of the month. And so my name is Gary Fichardt. Many know me as the FXBigDog, and we're going to talk about a couple of things in this evening's session. And we're going to focus purely on the Forex and exactly how to be able to use different tools to be able to make money in the trading the markets. Now, for those that have been using the Pip Grabber trading signals, I am absolutely certain that you are excited about what's going on because traders are making a bunch of money. In fact, there's been so much profits being generated. We have gone ahead. Let me go ahead and show you some results here. You can see that we have generated over 16,500 pips since the beginning of the year 2021. So it's been a fantastic year for the Pip Grabber trading strategy. And I know a bunch of you are excited about it because I have been getting a lot of good feedback from a lot of you. So today I'm going to go ahead and talk about the Pip Grabber trading tool, but also I'm going to go ahead and talk about different ways to trade the market using this tool. Now, this tool is used on SmartTrader. For those who are using it, it's called the Matrix tool, and we're going to go into the details of what that really is and how you can go ahead and use it. Now, just a quick sort of explanation of what the Pip Grabber trading strategy is. Really, what it's built down is to buy at support, sell at resistance, and grab 20 pips out of the market. And sometimes, yes, we go into multiple positions because that support or that resistance levels do not hold, and the market breaks through that. Just as an example, let me go ahead and show you on this chart, and I'm going to go ahead and share my screen right now. So everyone should be able to see my screen right now. And so just as an example, if we take a look at the way the markets are waving, so from here down to there, down to there, down to here, these levels are resistance levels and support levels right here. And so when you look at these levels, you look to sell at the top, buy at the bottom, sell at the top, buy at the bottom. And so we keep trending back and forth between support and resistance. And so what's really nice about trading this type of strategy is that we can go ahead and buy and sell off these levels using a cost averaging strategy. All right, it's also called a dollar cost averaging. And so what we'll do is we'll go ahead and identify a support level and start buying in. Now, we might buy in with multiple entry points because the support level that we believe that's going to hold, price sometimes goes through that. But it always comes back to retest it. Even if it's going to go north or go south, we're going to see a retest of that. And so when we go ahead and trade, we send out these buy and sell signals. And if you can look over here on my right-hand side, I'm going to go ahead and show you right here. Look at the signals that we've been sending. There's a bunch of signals. In fact, we've worked out there's about 150 signals that we send out every single month. So every month you're getting about 160 signals being sent out to your ByDzyne app. So those that are ByDzyne students, you're getting these 150 signals coming through each and every month, which is huge. That is huge. And from that, we've managed to generate over 16,500 pips already. And I'm showing you a live trading account that actually takes the signals. This is my personal live trading account. That is the signals are being generated from. So every time you see these signals, they are coming from me. All right. And so you're getting these signals, these buy and sell signals. And so what we're looking for is that support and resistance levels that we can go ahead and buy and sell off. Now, what you can also do is, and I've gone ahead and spoken about this in my trading room. And by the way, if you have not already been in my trading room, you might want to go ahead and make sure that you go ahead and join my trading room. As a ByDzyne student, you get access to my trading room that takes place on a Monday, Tuesday, and on a Thursday. And what we talk about in that trading room is we talk about the overall directional market, all right? We talk about which direction the market's going in, where there's support, where there's resistance. We actually go ahead and complete a document here that you get access to that tells you basically where the market's at. So if you look over here, we've got certain descriptions of exactly what that particular pair is doing so that you can make trading decisions, the right trading decisions as to what's going on. Now, as taken an example right here, if you look at the Euro Swiss franc here, we said that it is bullish, and we explained why we believe it's bullish. And so we've given a big description, or at least a full description here of exactly why we believe the Euro Swiss franc is bullish. And we also talk about the trading opportunity. What is the trading opportunity? And so when you go to the chart, you'll have a very good idea. And we spoke about the Euro Swiss to be bullish, not only because of this short-term move right here that we're expecting price to move back up, but we're also looking at the overall direction. So if I go ahead and compress my charts here, we believe that the Swiss National Bank is going to intervene if their currency pair is not going to get weaker, because they don't want a strong currency. They're not only looking at the Euro Swiss cross, but they're looking at the New Zealand Swiss, the Aussie Swiss. They want the currency pair, or at least the currency, to not be strong across the board. And so when we look at these levels right here, once again, we're looking at levels of support where we believe that the market's going to turn and head back up north. And so we did start buying in right here. We have start buying in right here. So we've added in multiple positions. Now, what's a fantastic tool to use is called the matrix tool. And the matrix tool helps you to manage your positions and to be able to enter the market at different levels without you doing all the heavy lifting. And I'm going to go ahead and give you a quick demonstration of what that looks like, so that you can get an understanding of what this matrix tool consists of. So let's go ahead, and I'm going to move this time frame down to a 1 hour time frame right here. It doesn't really matter, but I'm going to go ahead and add the matrix tool. Now, the matrix tool is a very simple tool that can be used when trading these support and resistance levels. Now, let me take a step back here and just explain something to you quickly. So when I talk about this matrix tool being very useful to buy and sell support levels, all right? So buy support levels, sell resistance levels, all right? When you're using the matrix tool to do that, okay, it can be used to trade what we do in the Pip Grabber strategy, where we chase after these 20 pip grabs. But it's also good to use when you're looking to trade longer trends as well. Like if you were trying to buy a support level here on the Swiss, and you made a decision that you're going to start buying in right about here, you could use it to not only chase off the 20 pips, but go for larger targets as well. And I'm going to show you how you can do that, all right? So I'm going to give you two examples. One example of how you can set it up when you're chasing after these 20 pip opportunities based on the trade signals that you get through the ByDzyne app. So when you look at the ByDzyne app, on the ByDzyne app, you will get trade signals coming through. And due to those trade signals coming through, you can make a decision whether or not you want to go ahead and follow that or simply stand aside. And so let's use an example, okay? Let's use an example. Firstly, let's cover the ByDzyne trade signals, all right, based on the Pip Grabber strategy. So when you get a signal that comes through on the ByDzyne app, and let me go ahead and use a real life example of a signal. And I'm going to go over here and I'm going to go to the most recent signal. So if you take a look over here, can you see here? Well, maybe you can't, so I'm going to go ahead and tell you. It says there, Pip Grabber, new order. It says US dollar Canadian. And it says they buy at 127.47. Okay. So it's telling me to buy at 127.47. So what I'm going to do is I'm going to go to the chart, and I'm going to go to the, let's go to the US dollar CAD, and there it is right here. Now, I have the US dollar CAD open in front of me. Now, I want to go ahead and say this. If you are following the signals coming through from the ByDzyne app, you don't have to worry about what time frame. You just have to worry about the entry point. Now, the entry point that the signal came through, it says buy. Now, what's very important is this. If I go ahead and put an entry point here as a buy at 127.47, that is right here, okay? Now, notice right here, since the signal came through, price has already moved up to 27.53. So we've already gone 6 pips higher than the initial entry point. Now, because I am looking to buy, all right, because I'm looking to buy on this particular currency pair, I want to get in with a better price than what the market's now offering. And so it doesn't make sense to me, it won't make sense for me to enter now when I'm going to get in right here where the market's moved already 6 pips, right? The market's already moved 6 pips from the entry, from the signal. And remember, we're looking for 20 pips. So if the target is 20 pips higher, and let's go ahead and mark off where the 20 pip higher would be. So if we're entering at 47, then 67 up here would be the target, okay? And that'll be 20 pips. So if the market has already moved 6 pips, that means all I've got left is 14 pips. So I'm not really going to benefit getting in late when the market's already moving to the target, right? And so that's why I said it doesn't matter what time frame you're looking at, but what does matter is where you're entering based on where the signal's at. So if the signal's at 27.47, I want to make sure that I'm getting a better price than 26.47. So if the market was trading down here, I could then go ahead and want to get in on this trade because I know that I've got a lot of profit to the upside before the market goes ahead and turns around. So I'm going to always look to get in at a better price. Now, so let's just sum up. So when you get the signal from the ByDzyne app, and the signal says that we're going to buy US dollar CAD, we want to enter as close as we possibly can to the price that we said to go ahead and enter. And anything shy of that, you need to make sure that you're not getting in at a worse price. Specifically, if you're chasing after 20 pips, you don't want to get in when the market's moved 5 or 10 pips in its favor. You want to make sure you get it as close as possible to that signal, right? Remember, we're doing some intraday trading. Now, although we do enter at multiple levels, it's still important to get in as close as you can to that first entry point. Now, if you feel like you've maybe got in, you may be late on this entry point, and let's say you got the signal, but you weren't at your computer or you didn't have your phone available at the time, and you come to the trading table and price has moved down, you can simply wait for the next signal. You don't have to enter at that signal, all right? There's nothing forcing people to go ahead and enter at that signal. So you can say, well, I'm going to wait for the next signal, and when I get the next signal, only then am I going to go ahead and look to enter. And that's okay. You can do that as well. You don't have to enter the first one. You can wait for the second entry point and then go ahead and trade the second entry point and look for your 20 pip profits, okay? Very important that we do that. Now, how do we enter, right? Using the Pip Grabber trading tool. Well, just as I mentioned early on, what you do here is you right-click on the chart, okay? So if you go ahead, let me do that again. If you right-click on the chart, look down below here, and you'll see Add Matrix, all right? Now, if it's Add Matrix, all I've got to do is go ahead and click on that, and it's going to open up this box. And this box is where you're going to fill in the information to go ahead and place that trade. Now, remember, the signal came out. it says buy US dollar CAD. So what I want to do here is I want to make a decision. Do I want to trade this with pending orders, or do I want to go with stealth orders? I'm going to say right off the bat, stealth orders are a better option. And the reason for that is stealth orders do not get sent to the broker. If you're using pending orders, then what happens is the amount of trades that you want to go ahead and enter. So if I change the number of levels and I change the number of levels to, let's say, 10, then what's going to happen is the system, the matrix tool, is going to send 10 orders to the broker. And if you keep doing this a lot, the broker's going to get started getting frustrated, and eventually they're going to go ahead and start closing your account down. So the reason why we got stealth order in here is to avoid any sort of frustration with the broker and force them to close your trading account because your orders are coming in and out and being canceled a lot. Because every time you cancel your orders or you change your orders, these get adjusted and the broker gets frustrated with that. So to limit that, keep it on stealth order. That is definitely going to be your best setup right there. Now, if you go to your lot sizes, how do we trade lot sizes? I'm going to say this. The best way that I can think of to trade with good equity management is to trade it with, and I'm going to talk about a moderate trading approach. A moderate trading approach would mean that you would trade one micro lot for every $10,000. Okay, I'm just kidding. One micro lot for every $1,000 you've got in your trading account. Okay, so every $1,000 you got in your trading account, trade with a one micro lot per $1,000. Now, it's very important that I say this. Okay, if you are trading an international account, then that would be fine what I've just said to you now, which means that your leverage with your broker is probably 1 to 100 or 1 to 200. But if you're in the US and you're using the matrix tool and you want to use good equity management, I'm going to say use one micro lot for every $2,000 in your trading account. Okay. And the reason why we're doing that is because of margin, right? You want to make sure that you have enough margin to be able to trade through the strategies without getting margin called or getting nervous about your drawdowns in your trading account when we do add on more positions. Now, I could go up to 15, up to 20 entry points on each trade and still be good with margin, because that's how I've managed my risk on my own trading account. But if you feel like you want to go ahead and be very conservative, then let's talk about conservative risk management. If you want to be conservative and you have a trading account with a leverage of 1 to 100, all right, 1 to 100, then you might want to go ahead and bump it up to $2,000 per one micro lot. And if you've got a 1 to 50 here in the US, then you might want to go ahead and trade one micro lot for every $3,000 in your trading account. You see how you reduce the risk parameters by just increasing the amount of dollar amount per one micro lot. So you just go ahead and make sure that you do that, and you should be good to go. Now, I've got different types of trading accounts. They're all live trading accounts that are managed differently. And some of them I have risking one micro lot per $1,000. I have another account that I do one micro lot per $3,000. And I believe I've got another one. I even do one every $5,000. So one micro lot for every 5,000. So different risk parameters. Now, I'm always going to suggest that if you're going to start off and you're not really sure what type of returns you're going to get and what type of risk you're going to have, then it's always good and safe to go ahead and use the worst, or at least the best case scenario. Not the worst, but the best case scenario. And the best case scenario is take $3,000 and trade one micro lot. And that way, when you do it that way, then you know that you're going to be in good standing, right? You're never going to run into equity. And then run it for a few months and take a look and see, do you have room, all right, based on what's happened in the market and how many positions you've entered, do you have enough room to increase your risk? And so instead of going with $3,000 for every one micro lot, you can then reduce it down to $2,000 for every micro lot. And if it even that's good, then go down to 1,000. But you can make that decision on your own as you monitor the success in your trading and the risk, of course. So the lot sizes, I think that I've given you a long-winded explanation on the lot sizes. But I think it's important because the one thing that's important about the strategy that we use is risk management. And so staying on the subject for a long period of time, I think it's important to hit home with this message. And I want to make sure that is clear. So make a decision on your lot size based on your account size, right? And then the next thing we want to go ahead and enter here is the distance between each level. Now, if you're trading the Pip Grabber trading signals, then go ahead and enter 25 pips apart from each other. Now, I want to say this, and this again is another disclaimer, that even though we trade with 25 pips apart from each other, remember, we are open to the market, I would say manipulation, but we're open to the market volatility, right? Which means that if there's a lot of volatility and the spreads are widened, sometimes if you look at the Pip Grabber signals that come through, they're not equally spaced out at 25 pips apart from each other, because there's slippage you have to consider, there's spreads that have to be considered, depending, of course, the time the trades go through. So it won't be quite 25 pips apart from each other. But our intention is to enter 25 pips apart, and whatever the market offers and gives us at the time, we'll take that. But that is our intention, all right? Now, if I'm going to be buying on this particular pair, then I want to make sure that my stealth orders are going to be below the market, okay? Now, this is important. The reason why I want my stealth orders to be below the market is because when I'm going to buy, I want to enter my penny orders, and they have to be below the market. So if I'm buying right here, and I'm looking for the market to rally, then my penny orders will be below the market. So if the market does come down, it's going to pick up these other orders as it then goes ahead and rallies. So the stealth orders right here, they've got to be below the market. So if the market does dip further, we get picked up on those positions. All right. Now, so we're going to put it below the market. Now, notice that I don't use stops or limits. But what I am going to use right here is close all orders on net pips. So I'm going to go ahead and put that in here, and I'm going to say I'm chasing after my 20 pips right here. So when the market goes to 20 net profit, that means that if I enter multiple positions, it's still going to take me out at a 20 pip net profit, and that's it, okay? And so as I look at this right here, all I'm looking for is 20 pips out of the market. And when it grabs me 20 pips, it's going to be closed out, okay? Now, if you're asking me, well, Big Dog, whoa, what about the stops and limits here? Come on, what's going on with that? Well, the strategy is designed to, firstly, number one, to manage your risk with very low risk so that you can chase after your 20 pips and also allow us to enter multiple times. And I'm going to say this. This strategy has given us the results on the strategy for the year has shown over 16,500 pips for the year, all right? And it's done this without stops and limits, okay? All we've used is a 20 pip grab right here, which means a net 20 pip profit. That's all we've done. and it's shown to be profitable over a long period of time so far. So which means that what is not broken, let's not try and fix that. All right. I've got a lot of emails from a lot of people saying, you should do this, you should do that, you should do this. It's made 16,500 pips for the year, and we're still not done. It's generated over 120% for the year. Why change that's working? All right. Why change a winning combination? Right now, until something goes wrong and things change and market conditions change, this is how we will trade it. Okay. Now, very important, because we got no stops and no stops in, risk management is always going to be your first priority, right? Allow yourself room for the market to move multiple levels without running out of money. Make sure that that is your number one goal. Okay. So entering levels here, number of levels, I've got it set to 10. You could set that to more than 10. You know, set it to 20, 30. If you want to make sure that it enters multiple levels. I haven't seen the system enter more than 15 trades. So I don't know if we need to have more than that, but just giving you a hint there. All right. And so once you've got everything set up right here, once you've got all of these levels and everything put in here, then it's just a matter of time. It's just a matter of clicking the OK button. Now I'm going to do that so you can see exactly how this plays out, right? So there it is. I've gone ahead and put it in. And if you take a look over here, the trade has now been implemented. Let me go ahead and add this right here. There we go. You see the trade has now been implemented right here. And if you look over here, you can see I do have, and it looks like I changed it to, did I use pending orders? Well, there it is. If you take a look over here, oh, hold on. Oh, yeah, sorry, it's stealth orders. I did use stealth orders. So I've got stealth orders right here. So what's important for you to note right here, notice these blue lines here. These are, if you look on the left-hand side, it says they're stealth. So these are stealth orders. That means it's telling us that if price moves down to this level, it's going to place a market order and put you into the market. And if it goes down further, it'll pick you up another trade. But as soon as it's in a 20 net profit, it will go ahead and close out, and the matrix tool will be removed from the chart. So which means it will not continue to trade for you, and it'll stop trading. Okay. All right. Now, normally I ask you, does everyone understand that? But unfortunately, I cannot see the chat. Or maybe I can see the chat. Hold on. I think I can see the chat here. Okay, good. All right, so let's go ahead and take a look right here. If we were trading, now remember, we just spoke about trading the signals that come from the ByDzyne app, and it is the Pip Grabber trading strategy. That's what we discussed, and that's what we did right here. Now, what you can also do is when you're trading support and resistance on larger time frames. Now we're not talking about just 20 pip profits. I'm going to show you a secret that I do that can generate huge profits for you as well by applying this strategy based on the same concept. All right, and let's go ahead and open up another chart. And I'm going to go to the Euro Swiss right here. Actually, you know what? Let's go to an Aussie cross. And the reason why I'm going to do an Aussie cross is because we've got news that's coming out this evening. And the news out this evening is the Aussie cash rate. There's a rate decision. They're expecting to keep the rates unchanged at 0.1%. We know that the Reserve Bank of New Zealand has gone already and increased their rates twice, 25 basis points each. So they've really raised the rates by 50 basis points over the last couple of months. And the Aussies have not done anything at the moment right now. They have done zero. All right. And so therefore, we are going to take a look at the Aussie cross and see, do we see an Aussie at support or resistance? Doesn't matter what Aussie cross it is, but we're going to look at the Aussie crosses and let's see if we at support and resistance. And what I'm going to do is I'm going to implement a trade leading up to the news with a cost averaging trading approach. All right, so let's go ahead and do this. It's going to be fun. So let's pop open the, let's go to the Aussie CAD first. All right, and let me do this. Let me go to the daily right here. Open up the daily. Now, I'm going to take a look. All right, so I've already done some analysis here on the daily. And if you look over here, you see that we have a downward swing, and then we've got a 1.27 right here. Right, here's a 1.27. Now, the market can still come down to this level, which is approximately about 46 pips. So you've got another level here about 46 pips. Now, I'm going to tell you a little secret. If you go to the daily trading range and you look at the average true range of the day, I've got it set up over here, and the average true range is 52 pips. So what I'm going to do here is I'm going to enter with my matrix tool here with a 52 pip distance between each other. And I'm going to expect the Aussie CAD to actually go bullish. And if it doesn't, that's okay. But this is what I'm going to go ahead and do. I can go ahead and do this. I can say that if I'm expecting this Aussie CAD to go bullish, how far can it go bullish to? Well, my target to the upside is actually this level right here. This is the target at 93.79. And so what I'm going to do is I'm going to go ahead and take a look at what is the distance, right, between where I'm trading now to this target right here. And let's take a look at the distance. The distance is 400 pips. 400 pips. So what I'm going to do is I'm going to use 52 as the distance between my entry points. And I'm going to go ahead and look for 400 net pips on this trade. So this means that either the one trade gets picked up and we go up 400 pips, or if I get multiple entry points, all right, I'm going to still look for a net positive of 400 pips. So let's go ahead and set this up. So I'm going to go to, I'm going to right click on my chart. I'm going to go to add matrix. And then I'm going to go ahead and set up stealth orders. I'm going to change this to, let's go 10 orders right here. I'm going to just place my lot sizes. I'm going to go ahead and use 52 pips. 52 pips. In fact, let's round it off and let's say 50 pips. 50 pips apart from each other. I'm going to buy, so I want to place my orders below the market, right? And I'm going to go ahead and add in here. I'm going to say close all orders on a net positive of how many pips? 400 pips right here. Okay, there it is there. 400 pips. And I'm going to go ahead and submit this. So that means when we get into a net positive of 400 pips, doesn't matter how many entry points, we're going to go ahead and trade in. So there it is. I'm going to go ahead and submit. Now, check this out. So this means that I'm expecting the market to go overall bullish to about 400 pips. And so what I'm saying here right now is I'm saying that if I'm wrong on my first entry and the news comes out tonight and it creates a huge weakness in this market, and it goes in and spikes down right here, it's going to pick up some more positions, I'm still going to look for a 400 pip net profit. Now, what's great about using this strategy is that if the market goes down against you and then starts coming back up here and it gets back to your break-even point, you can get to a point where you can say, hey, you know what? Maybe I was wrong about this. Maybe I was not seeing what I should be seeing, or something didn't go quite the way I thought it would go. Then I can start making a decision to get the heck out of Dodge and at break even or very little loss on this trade. And so doing this by applying the strategy allows me to be wrong with my initial entry point, but also allows me to be able to take advantage of the move if it goes down and then comes back up again, and I still believe I'm right, I can continue to hold that position and still chase after that 400 pip net profit. And so this strategy has been applied into my own trading, and it's been working out really good. But the most important thing about this, just like the Pip Grabber trading strategy, is that we make absolute certain that we are buying at the support and resistance levels where price is going to bounce back. Because if you get in at the support and resistance levels, take a look at the opportunities, all right? Take a look at how many pips the market has moved since it's gone ahead and created this. Let me go and take a look right here. I'm going to tell you what the number, you won't be able to see it, but I'm going to tell you. I mean, this move from here to here was 1,600 pips. This move from here was 435 pips. That move over here was 750 pips. And then we had another bearish move right here. There was another 430. This going up was 280. That coming down was 630 pips. And so you can see that there's a lot of opportunities as you start identifying these turning points in the market. So if you can pick up these turning points right here, and you trade in these support and resistance levels, you can find that price will move in these ranges that can give you anything between 250 to 1,000 pip opportunity. And so all we're doing is we're saying, hey, we're not really interested in getting our first entry point right. We could be wrong. But what's the important thing is that if I trade at the support and resistance levels, I'm giving myself a higher probability, a higher success rate based on the fact that it's at support, we're expecting bounces, or it's at resistance, we're expecting price rejection. And if you can do that, this will create better trades, better opportunity, and high probability trade setups. And that's all we're looking for right here. All right. And so this is the strategy, like I said earlier on. This is the secret. This is the ideal secret strategy, or the secret recipe to finding successful trades in the market. Okay. Now, if you say to me, well, Big Dog, you know, I've got these other types of strategies that I like using, or like, that's fine. You know, you could use different types of tools, whether you're using moving averages or using other sort of strategies to help you to find directional buys. You can absolutely go ahead and do that. You can use that in combination of using the matrix tool, because all the matrix tool really is, it's not a strategy. It's really just a tool to be able to help you manage a sort of trading approach. So it's a trading approach, and it's a tool to be able to help you apply that trading approach in the market. That's really what it is. So using other strategies, using technical analysis to be able to find directional buys, using technical analysis to be able to identify your support and your resistance levels, that's absolutely welcoming. And so this leads me to my next thing. Traders, once again, I mentioned it in the beginning. I'm going to mention it again. My trading room, it's called the hybrid trading room. Get into the trading room on Mondays, Tuesdays, and on Thursdays. All right. We talk about so many good things that traders need to know about. We talk about market direction. We talk about trends and all this other good stuff. And we focus on just a few pairs. You know, even though we've got 28 currency pairs that we cover, we do focus in on just a couple of pairs, or maybe 3 or 4 pairs in the session, so that we make sure that everyone's clear on what is going on with that particular currency pair. And if there's any suggestions that you may have, you want to go and send out to me in the trading room and say, hey, Big Dog, can you take a look at this? Then absolutely, we can go ahead and address that as well. What I also want to go ahead and mention as well, I do live sessions on my YouTube channel on the Pip Grabber trading strategy. In fact, I trade this in the live market, and we look for setup, and we chase after 20 pips, and I do this live in my YouTube channel. So check out FXBigDog and search the name FXBigDog, get subscribed to the channel, and then you'll get access to, of course, the trade setups that I do on the Pip Grabber trading strategy. Also, I talk about other things as well in the different sessions and that. We talk about cryptos. We talk about a whole bunch of things that I'm sure a lot of you are interested in looking at and interested in doing. So make sure you guys connect. There's so many ways that you can connect with me via social media, via my trading room, at the hybrid trading room. Get connected. There is no reason why your 2022 could not be as great as my 2021 has been. We have created over 16,500 pips. I've generated over 120% on the strategy alone. It has been mind-blowing, and traders have been excited. So let's say get excited. Join the different connections that we have. Get connected. Communicate. Talk to us. Let us know what's going on, how your trading is going on, what's going on. Open up that communication so we can go ahead and help you improve your trading. All right, traders. Well, that's pretty much it from me.